morning, everyone. It's always like a pleasure to be on the Huddle, especially the last 3 years. I've been regularly attending, meeting a lot of energetic young entrepreneurs. So today I'm going to share some insights on my journey of starting up to scale, and I hope for maybe some learnings from my failures as well as the learnings that I had in this journey. I thought of sharing with all of you. So I'll start with a brief intro about myself. So my name is Anish Achuthan. I'm the co-founder and CEO at Open. I have close to 20 plus years experience in the financial technology space. I founded Open in 2017, and Open is a business banking platform that helps small businesses and SMEs automate their business finances. We power over 35 lakh businesses in India. We process close to around $30 billion in annualized transactions. Apart from that, we have an enterprise business which powers SME banking for 15 out of the top 20 banks in India, like SBI, ICICI, HDFC, Axis Bank, etc. So I'll also talk through some of the challenges which I had in this journey and how we got started as well. So I'll also take a lot of relevant this thing from my journey as well, and I'll also try to generalize that so that everyone can relate to it. So while starting up, as you all know, the first important thing is to identify the right problem statement, or pick up the right problem statement and find the solution to it. In my case, the problem statement came from the experience of previously working with the other companies like PayU and CitrusPay, where we used to provide payment gateway services to a lot of these SMEs and small businesses. And one thing which we realized was that banking is broken for them because they use multiple systems to manage their banking, their accounting, their finances, etc. And that's where I had this idea that if we are able to bring all of them together in a unified platform which can solve for it. So similarly, whenever you are actually starting with the thought process of starting up, either you would start by coming across a problem statement, either through in your daily life, or probably the industry that you're working with, or probably through a little bit of research. So it's very important firstly to once you identify the problem statement, then look at the ways in which how you can actually figure out a solution for it, either through a product or a service. Now, the other important aspect is when you are when you actually come across this problem statement and you have really a solution, always look at how big or scalable is this solution. For example, you don't really want it to start another food delivery startup, or you don't want to start another cab hailing startup like an Ola. So always look for is the solution exists really in your market or the market that you intend. And it's also a good practice to look at your global peers. Is there something people who are trying to solve for this idea in a market like a US or a Europe? Because that will give you a lot of inspiration, a lot of insights in terms of and it also reduce the learning curve, because rather than you taking on your own and trying to solve for this idea for 6 months, maybe if somebody has actually done that in Europe or a Silicon Valley or a US, you can take a little bit of inspiration from that part of it. Also, the earlier point which I mentioned, you need to, when I'm talking about the idea is scalable, if you have more than 4 or 5 players already established or solving for the same idea or the problem that you are working on, then you may find a lot of challenges in terms of raising investments, especially private equity funds, as you grow up. So it's very important that ensure that you don't have it's not like a very democratized or an established product that you're working on. Now, after identifying the product and the solution, in case of open, what we did was we conceptualized the solution, and obviously I didn't have the capital to start up, so I reached out to, in my case, a set of angel investors, the people who used to whom I used to report in my previous companies, and they got me the first 2.5 crore check. Now, typically when you are initially starting up, it's very difficult to get your first investment because the challenge is that you don't have a product, it's just an idea. So it's always advisable to try to see if your product can be done in a very minimum viable prototype. Can you actually release a minimum viable prototype without too much investment? For example, if it's like a software-led businesses, it's much more easier for you to launch the product, maybe get the first 10 customers or 100 customers. It may not take too much of a cost. But if it's like a robotic startup, or if you have a mechanical things, probably you may need some money to these things. And it's always recommended to go to the friends and family initially for your first investment or the 5 to the 10 lakh investment, and then try to validate the product either through by getting your first initial set of customers. For example, if you're building an ERP system, can you actually get one customer free to use your product, basically, which is actually a validation that somebody really needs it. Or if you're really working on a consumer product, can you actually get the first 100 customers? And that's when you can start pitching for your next set of investment, maybe up to a 20 or 25 lakhs investment. And during this period, it's also very important to build your thought leadership early in the journey. Thought leadership is nothing. It's more about how do you make yourself, brand yourself or a leader in the industry which you are in. Maybe you are just starting up, probably on an idea on maybe a generative AI-based banking. So if you keep talking about that in the forums, in the circles, or write blogs, or writing on LinkedIn, what happens is that your prospective investors, partners, they may be reading it, and that's one way to connect to your prospective investors. Because many times the bigger challenge whenever I interact with a lot of these entrepreneurs is that how do I get my first funding? How do I get to an angel investor? While it's there is no right or wrong answer. You can always approach angel investors, but you should understand that the kind of they would be meeting probably hundreds of applications in a month. They recently, not an angel investor, but one of a venture capitalist fund who's also our investor, they were saying that they get up to 5,000 applications every month. Now the investment they make is 2. So always try to ensure that the investors chase you. They actually come to you, which means you should actually start focusing on building your brand right from day 0 or day 1 of your startup. Now, when you even before, while you are talking about taking up the investment, the next important thing is to get the right team for you, which is starting with the co-founder. While there has been exceptions in terms of single founders running a company, entrepreneurship is a very tough journey. It's a journey of probably 5 to 7 years or 5 to 10 years. and you go through a lots of ups and downs, both emotionally, financially. There's a lot of stress, and you also and there are like certain things which you can't tell everyone. So that's where the co-founders come into the picture, wherein you are not alone in this journey. You can have you have someone to actually share the challenges or like keep on keep cheering you up. That is one part of it. Secondly, to bring in the complementary skills. Probably you would be really good in technology or on the business development side, but you may need somebody probably who is good in sales or good in marketing. So it's always, it also helps in, so always try to get a co-founder with a complementary skills. Now one big mistake a lot of entrepreneurs do is they choose a co-founder only based on the skill or only based on the industry expertise. Okay, hey, I met this guy who has 20 years of experience in this product company. He has done that. I'm going to actually get him as a co-founder. Sounds good in paper, but the real challenge, what you need to really look at is like getting a co-founder is like similar to getting a life partner. Like in marriage, probably the chances of the frequency match would be like a 1 in 100 or a 1 in 1,000 is the same that applies in terms of the entrepreneurship journey. So always choose your co-founders wisely. Best friends doesn't mean that you can be the best co-founders. And I still don't have an answer on what are the right ways to get a co-founder. Unfortunately, I got my co-founder is my wife and my brother out of the things. Doesn't mean that probably it would work for this thing. So there is no, I don't have a right answer on it, but one of my, at least from what I could say is always choose this wisely, and this plays an important role. Now, along with the co-founders, you will have an initial set of people who you need in this journey, and this could be the first 3-4 colleagues or the teammates that you get for your startup. It's also very important to get that, because this 4 is 4,000, and this plays a lot because culture is also very much important for your growth of your scaling up your startup in the later stages. And you can't build a culture at a later stage or saying that, okay, when I raise X amount of money, then I'll start building the culture. Culture is again something which needs to start from day one of this. So to summarize, when you're just starting up your journey, finding the right problem, checking whether this the solution that you are building is really scalable. Do you have enough? Take inspiration from references. Second part is always try to start small, if possible, bootstrap and launch your MVP. If it's a software product, don't take investment at this stage. But if it's a hardware-oriented product, take approach the friends and families, try to get your initial set of customers, and this part is much more before this by finding out the right co-founders and the right team. So this is the initial phase of the startup. Now, scaling up a startup is when you have started, you start getting your first set of revenues, you got your first 25-30 member team, 35 member team, and that's when the challenges of scaling up happens. So in our case of Open, we were, as I told, we were lucky to get a check when even before the company got started, the 2.5 crore check. And probably one thing which I learned was it's all, you never know where would your first investment would come from, because the first investor who invested this money, he was never an angel, done an angel investment before Open. So this was the first investment. Obviously now he has done like 100 plus investments. But I worked for him for 3-4 years. He was a co-founder of this company called Citrus, and now he's the CEO of this company called Pine Labs. So always like, sometimes it could be the companies that you worked in, your previous bosses, or the clients that you worked would actually come. So it's always like, very important to build your network while you're on your career. Now we got the first set of funding. We got a 20-member team, and the initial set of the team that we had in Open are 80% of them are the people whom we used to we used to have in the I used to work with them for the last 5 organizations together. So that actually helped a lot. So many times, like, because when the initial time you may not have that much capital to pay their salaries. So that's where, like, it's very important to get people whom you really know. In case of Open, we had even people who had come by taking a cut of like a 75% cut in their salary, and so we have got the initial set of the team. And then when we started working on this, launching the product, we need to partner with the bank. Technically, I need to integrate with the core banking systems of the bank. And banks didn't really give us an opportunity to even take these discussions further, and that's where we actually faced the bottleneck. So another important aspect is that while you are pursuing this idea, you may hit a roadblock, especially if your product is dependent on other partners. That if you are building like for example, like normal, like a social network, you don't have any dependencies. It's just your code and you deploy it. But if you're actually building like let's say a healthcare startup where there is a dependency on a hospital or a lab, that's where, like, that means like you have like a dependency on the so sometimes like things may not work the way you this thing. So that's where it's always very important to keep either persistently chase things where you actually have roadblocks, or sometimes like you have to pivot your idea or the product. In our case, when we hit the roadblock of banks not willing to partner with us, one thing which we did was we heavily invested on someone who was into this banking domain for the partnerships and alliances. And even I moved to Mumbai for that 6 months, and finally we were persistent to get an ICICI Bank as our first client. So be persistent. You may come across a lot of no's, and the good part is like when you have like 90% of the opportunities where you get rejections, take it as like an opportunity, which means like there is an opportunity for you to convert that. Also invest rightly on certain things. For example, in my case, it was very important to get someone with 15-18 years of experience, because that person probably could give inroads into the banking part of it. Now, when we got the first bank, when we started getting the first set of customers, that's a time when we used to heavily invest in terms of the thought leaderships, in terms of writing articles, going to events like this, giving interviews to newspapers, working with journalists to actually create your story. And the first break from a official venture capitalist fund investment. Before that, I'll also talk about after raising this 2.5 crore fund. One of the investors approached to me and told that he wanted to put 5 lakhs of investment into the company, and we were like, we had already raised 2.5 crores and then 5 lakhs doesn't make any sense. So I told them we are not interested in taking that 5 lakhs. But then he was very persistent, and he got this 5 lakh, and what happened was that he was part of this network called the Angels India. And there is a syndicate of like 100, 150 investors, they put together and came saying that, okay, now we can actually bring a lead of around 1 crore rupees of funding. And that's a time when there is one of the larger groups in Japan, which is called the Recruit Group, which is similar to like not exactly like a Reliance, but a large group in Japan. They came across an article about Open in Economic Times online article. They were actually looking for investments in Southeast Asia and they came across this article. They reached out to some of the VC funds in India, hey, can you connect to these guys at Open? And that's how we got the initial connect. And then Recruit came on board, and that's also time when the Unicorn India Ventures, the fund of funds from Kerala, Startup Missions, they came on board, and that's where we got the first pre-series A fund of like 2 million. Now, the point here is that this funding happened primarily because of the articles the newspapers wrote about us or the thought leadership. So as a startup, invest heavily on getting your brand out, because today, that's where you need to actually figure out like the different ways in which you can actually get there. Don't do the mistake of hiring a PR agency in this stage, because journalist doesn't like a PR agency to come and pitch, because till the Series A, Series B, the founder should be the story, the founder should be the one who's actually talking to it. And a lot of journalists really wanted to find out the business journalists, because they really wanted to support this ecosystem, support these things. You will always get enough people to support you to get your story out, and you don't have to really spend on this part of it. Now we got the first 2 million funding, and the next thing what we are looking at is we were 25 and we want to now scale it to 75. The first thing I got was to get a person to lead the people function. I interviewed around 20 people for this role, and all of them who come from a different background, in the human resources background, they were coming and talking about, hey, let's give resources this thing to make happy, let's do this for the resources. The word resources were sounding very frequently in all of the 20 people I met. Till the time I met Priyanka, who is the current, currently leads our people function, she actually referred to people as people, the colleagues. And then I told about my vision for how I wanted to build this startup. The first thing I told was, I'm a 10th standard dropout, I've never been to college, and all my friends keep on bragging about their college life. So I wanted to create exactly a college campus in Open. I want to create all the fun. Secondly, we wanted to, like the name reflects, we wanted to actually create a culture of openness. We wanted to ensure that the people the people who are believing in your journey, they don't have to worry about anything once they get to work, whether there are family issues or this. So these are the kind of these things which I told her, and she actually took it up on her to actually, today we are at around 500 people to build a culture which is which probably was in alignment with what we wanted. So at the scale of a 25, try to actually get someone to lead that function to build the culture and this thing. So never go for mechanical, robotic ways of creating HR days and culture days. That will not. It should actually come from your heart. And for that, it's very important that the person whom you bring in to lead that, lead that also aligns with that, and he or she should actually come from that part of it. Now, once we started this thing, once sales started happening, we started having the partnership with the bank. The first product got officially launched. We got the first funding, and that's when we started looking for the next set of funding. We were raising about I think it's a 5 million funding, and the pitch to the investors that, hey, we had actually now have this MVP, the product got launched in beta, we have got this number of customers, we are doing this much transactions. Now I need money for marketing, I need people to scale up the product, so I need to hire more people. I need to spend on the sales resources, I need to expand more on the things. So that was a pitch to the things, and when the investors who approached us, for them, there was always like a ready metrics for them to actually look and like invest on this. In fact, we had to actually got multiple venture capitalists putting a lead term sheet. So just one more thing, in every investment after like a pre-series A or series A or series B, there is always this thing term called, you would have actually come across this term called lead term sheet. The lead term sheet is nothing. The first investor or the investor who says that I am going to take this lead in this round. So that lead investor always takes all the, they actually negotiate on behalf of all the other investors. They set the terms, basically, the stake that you have to give, the amount, the quantum of investments that you have to give, and the rest of the investors has to follow. So primarily you have to deal with only the lead term sheet. Secondly, the lead investor takes a lot of risk, basically, so the other investors also trust them, saying that okay, if Sequoia Capital is taking the lead, then I would actually join them. So sometimes it's very important while you're talking to investors to get a lead, because when somebody has put a trust or they believes in your idea, then others also get a comfort. So rather than like trying to deal with 3 to 4, you always try to, in the larger stages, try to get this thing. Them showing 0, I was showing 40 minutes, so I don't know how much time is left, but you know, this thing in the time is over. So the series, during this stage of your series A, or when you are actually, your product has actually reached a little bit of like post beta, you are actually seeing a product market fit, people are starting using your product. This is where it's very important to keep on innovating on your product journey. In case of like, or sometimes like looking at pivoting your journey. In case of Open, when we were a direct customer product, which means like I have to tell the product directly to an SME, where the bank was partnering with us. We also convinced the bank to distribute the product through their branches, which really helped us. And during this phase, the bank asked us, can you white label your solution? Which means I'll put my brand, I'll not show Open anywhere to my customers, but I'll distribute your product on a revenue share basis. This was like a tough call to us, because I have my product and a bank is now saying that okay, I wanted to create a similar product where you can be a technology partner kind of a thing. Somehow we were not very convinced about these things, but we had a lot of pressure, because that's the only bank that also powers us. So if the bank goes off, it will also have an impact on those things. And we did an experiment of like going white labeling for that bank. And what happened was that becomes one of the bigger success stories on a distribution channel for. So the ICICI Bank, they branded this product as Bank Connect. They started distributing this product to all their branches and the customers. Today that decision led us to 15 out of the top 20 banks in the country now white labeling our solution, recent ones being in Axis or HDFC. So sometimes like in this journey, it's very important for you to actually identify opportunities, keep on innovating on the products part of it. And when we hit, I think, the first 100,000 businesses or 1 lakh businesses, that's when we started getting, we got approached by the Series B set of investors. That's where we raised around 250 to 300 crore funding. This was Tiger Global. Now, in all of this journey till the Series B, I never had probably like a consultant or a investment banker to help us in terms of raising the funds. we never pitch to an investor, it's always inbound. And I have seen this with many of the peers that peer entrepreneurs. So contrary to the popular thinking that you should always go and approach an investor, figure out ways in which an investor can actually reach you. In this case, Tiger Global is a global fund. They asked for a 30 minutes Zoom call on a Friday, and then they told next week they are coming there. Again, one person met for just 15 minutes and left. And on a Saturday, my phone I was sleeping and I started getting a lot of rings, and then suddenly my existing investors were calling and saying, hey Anish, why are you not picking up the call? The Tiger is trying to reach you. And when I picked up the call, what they told was like, hey, we wanted to put like a 30 million investment into the company. Can I send the term sheet right now? Because what we realized later was that the company has done a lot of due diligence even much before the funding happened. So a lot of like larger global investors, they will, larger investors, they actually do a lot of due diligence on you, a lot of research on you much before the investment happens. Again here, the metrics is what they were looking at is like your numbers in terms of the growth numbers. So in case of like Open, the 100,000 SMEs, we are still not at a revenue stage at that part when we raised that 250 crores. So we had zero revenues, but we had like 100,000 SMEs using our platform because the platform was given us free at that point of time to the customers. And then we were processing at that point of something around 14,000 crores of transactions. So that was the metrics. Now, along with these metrics, always these investors look for the future potential. For them, what they saw was like, okay, this can turn to become like a financial OS for SMEs. Every SMEs would require it, and then you can actually create revenue models on top of it. That was the thesis they had. So most of these investors would also have a thesis on the segments. For example, today somebody would have a thesis on how generative AI can transform in different healthcare or banking, or probably something to do with on the health tech side of it. So always try to, if you can also try to understand what the thesis of some of these investors, and it's very simple. You can just go to Google, listen to some of their podcast or what they actually talk about these things. Then you can start looking at positioning yourself for those investors, or when they actually pitch to you, you can actually formulate, you can actually work on that part. The next two rounds of our investments was within 1 year of this journey. We again went from 100,000 users to close to 500,000 users. Our transaction volume increased. We started making small revenues, was still in losses. That's when we engaged with the investment banker. So as I told, like till Series C round, till you raise your probably your for 250, 300 crores, the founder is the story, your company is the story. Don't get anyone to, get you the funding, and probably 90% I believe that you cannot get it. But after your Series B, that's where you can engage a lot of private equity funds. For example, like Avendus Capital is the one who actually helped us raise the funds. What they did was that they met up with a lot of like this dating sessions with investors. So they bring all these investors like a Huddle kind of event every year basically, where they make you meet them. Nothing happens, but you get to know, the investors get to know you and the product in just 3-4 days. And later when you are actually on your fundraising journey, they will sometimes recollect you. And good part is that investment bankers help you set up that thing. So it's always right to pick up an investment banker in that side, and that's a round where we got Temasek, Google, Visa. Again here, the lead, just because Temasek is leading, that made Google came on board. When Google and Temasek was coming, that made Visa came on board. So that's how it's a ripple effect. When you have like a good lead, others wants to follow that, and that round probably is where we raised the next 700 crores of funding on the Series C round, and then post another 6 months we got a strategic investor to come in, and then that's a round where we get into that unicorn stage. So also this stage brought you a lot of challenges, because suddenly from 70-member team to when you go to 500, your culture takes a large hit, especially for us. COVID was one of the reasons, because the people who suddenly join like 100, 150, they may not be able to get to see the same kind of that connect. So that's where it's extremely important to focus during that stage, probably scaling up your culture team within your people and culture as a function, just to focus on this part of it. Also, this is a stage where you have to look at like the processes, because earlier it was like walking up to that engineer and saying that, hey, can you just change this logo and put it, versus now when you have a larger team with multiple departments, it's very important to build the processes. Now, the processes when you are putting up, just understand that the processes will also reduce your speed at least by 5 times. If I was able to get that logo done on that website in 2 days, now it is taking me 3 months, because I go to that UX guy, he goes to approval, the QA and all of those processes. So ensure that your processes really doesn't impact your this thing, because we need to remember startups are always also about the fast or the swiftness of or rapidly shipping your features and the products, and that's probably one area where we had a lot of challenges basically when we suddenly scaled up, and we all have to actually go back to the drawing board and think like how can we be like these things. Also ensure like once you are getting into a larger these things, some commitment back to either your entrepreneurship community, the people. So for in open, around 30% of our workforce are people who are considered to be not employable by other companies. We had people who had been, when I went for a campus recruitment, the cab driver who took me from the airport to the cab, 20 years working in Dubai, coming back, was not able to really get into a lot of like liabilities and running away from home and working as a cab driver. Today he would be probably one of the top paid categories in the sales function. So sometimes, so like that, we have around 30% of the people. There are like women who had been thrown away from their families, nowhere to go, was actually written to us, never worked for the last 20 years after college, giving them this thing. And we found that some of these people are actually, not some of them, all of them are actually, they have that because you give them that opportunity. They really, they becomes like your, what do you call it, the superheroes or the champions in your journey. You don't have to tell them about like, hey, I have this thing on a Saturday or a Sunday. They don't really look at like they may come, they have to actually work kind of thing. In terms of gender diversity, I always like, this is something which is like very important to me as well, personally. From a founding team, we are like 50%. Two of my co-founders are women. We always believe that a good diverse workplace brings both in terms of, not in terms of gender, but in terms of the cosmopolitan thing. So we have now people from around 18 states, almost equal weightage of like from Karnataka, Kerala and Tamil Nadu, and then the north side of it. We have around 70% of our senior leadership as women. We have now, for a very long period, we have around 45% of our total workforce as women. So these are also some things which actually helps and triggers in the culture. It's not that I'm pro-women or not pro-women, but I'm saying is that like, get the right mix, and gender is just one part of it. Bringing the culture helps. Yeah, so I think then the set of people that you require from your first 10 crore revenues or 0 to 100 people is different from the next set of people. Probably you may need to have actually a new CTO, you may have to be the head of products, but and this is very common. So always like because probably the initial set of people that you had helped the company to scale to maybe 1,000 users, but suddenly what happens when you have like 10 lakh users coming and hitting on your platform, and you may need like the expertise. So always like you may have to bring in new set of people at every stages. At a Series B stage, you may need a different set of people. When you're at the Series C or a Series D, when you're planning for an IPO, then you need a different set of people. But just always remember, there were always like the initial set of people who trusted with you, who are ready to work for you by taking a 74% cut. Ensure that you also create a growth path for them. It should not be at the cost of them that you're bringing these people. So you need to properly balance it out. So because they trusted you, and they're the most people who would always, because the new ones who had come probably would not have trusted you kind of thing, right? So anyway, I think Mipul is giving me the time out. This thing, so in the 2 minutes I'll just the one more important part which was is that compliances. Today we hear a lot about a lot of bad news was actually happening in the startup space, especially in the last 1.5 years. Founders siphoning off funds, a lot of like mismatches in the audits, etc. And I think this has actually created a dent in the startup branding outside the for the Indian startups, mostly for outside investors. So it's also a responsibility for all of us entrepreneurs, right from the beginning, start focusing on compliance and the audits. It should not be that, okay, I get that 50 lakhs, okay, right now I put it in this account, I'll not, that one is that thing. Secondly, your regulatory compliances depending on your startup. If you're a healthcare or if you're a financial services, start that process right from the beginning. In case of a bank like an SBI, when we integrated, we have to go through 3 years of 41 InfoSec compliances. Probably we were the only fintech to actually complete that compared with the rest 20, and we got an advantage of around 18 months of lead. That's because we started some of this process very much in advance. So always like focus on the compliance part as well. Really sorry for taking too much of time, because one, I couldn't have a timer over here. So and thank you.